in the transitional provisions that can be applied by an entity. Each entity must consider the relevant directives depending on the type of entity. It is the same in all the directives. There is a retrospective application in terms of GRAP 3 with some relief. Start accumulating information to meet this requirement. The effective date of the standard is for financial year starting on or after the 1st of April 2025. It is important that in the video, we cannot cover in detail every requirement of the standard, and it is a starting journey. However, entities must comply with the terms of the transitional provisions. There are also some additional disclosures. Some additional disclosures include quantitative disclosure in a tabular format regarding previous classifications, current classifications, and the carrying amount, fair value of instruments reclassified to amortized cost, the reconciliation of previous measurement categories, and the asset classes with new categories and asset classes that need to be disclosed. There are additional disclosures for the classification out of fair value to amortized cost, and the effective interest rate on the adoption date of the standard and the interest recognized. Lastly, qualitative disclosures on the classification criteria applied and the designation and, if applicable, redesignation of instruments. The transitional provisions must be read along with the standard requirements. Before I close off, let us just remind ourselves once again at high level of the summary of the changes. Remember that the scope for financial guarantee contracts and loan commitments has changed. Take care in applying the classification principles and reclassification principles for financial assets, and in the case of reclassification, financial liabilities. For the measurement of amortized cost and calculating the interest, the gross carrying amount or the amortized carrying amount should be used. Impairment of financial assets changed from the incurred loss model to the expected credit loss model. Remember, we now need to determine, for example, a significant increase in credit risk and what is seen as default. There is a general approach and a simplified approach, and we do not just look to the past. We need to consider the past, present, and future indicators to determine the ECL. There are new and additional disclosure requirements, and do not forget about the impact of the transitional provisions.